Hey guys, so in today's video, we are currently in some longs on the NASDAQ. And as you can see, we're floating. Well, you can't really see that. Give me 1 second. So if I bring this over, you guys can see that we're currently floating $420 in a profit. And the reason why we're in this short, so I'm going to break down in a second, but as you guys can see, I want to go break even because we are pushing back down, right? However, as it stands, we have this sort of 1 minute fair value gap, which is looking extremely juicy right here. So because of that, I haven't gone break even just yet because my anticipation is that we're going to come down, tap into this fair value gap, and then go higher from there. So if I go break even now, that might be a little bit premature because we may come back down to close out this fair value gap. So that's why we haven't done that yet, but I'm looking to go break even as quickly as possible because we are in a sense counter trend, just because if we look at the lower time frame trend, right, we are overall bearish, putting in lower lows and lower highs, but the overall direction of the market, obviously on a higher time frame, is that we are bullish. So taking both things into account on an intraday perspective, I don't really want to be too much risk on this trade. Let me refix this screen really quickly. There we go. So if we can come down, close out this fair value gap and have a nice reaction, then I'll be very happy in going break even. Hopefully the move sustains. We're not targeting too far. We're only targeting the liquidity that is sat above these highs right here. So let's see what happens. I thought I would give you guys a look at the management of this trade because there is a high chance that we could possibly get taken out as well. Now, if we don't get a reaction from this fair value gap that we've just tapped, then I will be going a break even to try and reduce risk as quickly as possible. What I want to see is I want to see maybe some sort of engulfing candle, right, that comes up all the way to here. What would be even nicer is if we got a breaker structure to the upside there, and then that would give me a lot of confidence in pretty much going break even and taking risk off. But if we even drop down to the 15 seconds, we can see that price can really come all the way down to here, right, to this internal 15-second fair value gap. It doesn't necessarily have to just blast up from there. So let's see what happens. If we get a bullish engulfing candle that closes right here, then I'll go break even. If not, then we'll wait to see what happens with this 15 seconds all the way at the bottom. Either way, it's looking like we're either going to take a break even or a win. Let's see what happens. That wasn't a great close on that 1 minute candle. So let me sort of break down why we're in this trade in the first place, right? Overall, as we can see, the direction of the market is very bullish. We're putting in higher highs, higher lows, higher highs, higher lows. So once we've done that, obviously, we now understand that our trading range is between this high and this low right here. So when we come into our trading session, if we come down to the 15-minute time frame, we can see that there's a whole bunch of different areas of liquidity, right? We had the London session lows right here, which we got taken out at the New York Stock Exchange Open. We had the Asia session lows right here, which got taken out during the New York Stock Exchange Open as well. And then we've got liquidity that is sat below these lows right here as well. Now, once we took out the liquidity below these lows, this is where I've then got involved with the market. And as we can see coming down, we created lower low, lower high, lower low, lower high, and lower low. And then we've had that break of structure to the upside, signifying that price is flipped from bearish to bullish. So everything is pretty much following my plan. But this is our last stopping point. We can remove this 1 minute fair value gap as we've now tapped into this 15-second fair value gap. And this is our last point of demand. If we do not hold here, the chances of this trade losing are literally like 90%. So if we do not get a nice, very nice reaction like this, then I will be going break even straight away. But let's see what happens. That was a really, really good reaction if we can sustain it. But There's the candle close. Now, see, this is a difficult one. Do I go break even already? Or you know what? Let's see what happens with this next 1 minute candle. We want to give it some space to breathe, right? We don't want to jump to conclusions too fast. Now, another thing we can do is wait for a 15-second market structure shift. So we've just put in this high right here. If we can come back and close above that high, then we're ready to go. But if not, then yeah, the chances of this trade winning now to me are very, very small unless this candle pushes back to the upside and we get a close above this right here. So let's continue to monitor and see what happens. So as you guys can see, we have now closed below that 15-second fair value gap, which means the chances of this trade losing are extremely high, and we are very rapidly approaching our stop loss. So like I said, I don't have much faith in this trade. There's nothing else we can really do but watch it hit our stop loss, isn't it? So these things happen. The trade overall followed the trading plan down to a T. So there we go. And there's the stop loss. So I would have taken this trade again if you know obviously I had to, because it followed my plan down to a T. Everything was looking good. Overall direction of the market is bullish, so we're kind of pro trend in that sense. The entry criteria was great. It was just I could have gone break even, right? I could have gone break even much earlier. I could have taken risk off immediately once we had this push to the upside. But like I said, I wanted to wait to see how price would have reacted from that fair value gap. Fair value gap didn't hold, so be it. Right? That is how we trade. That is how we manage. If that fair value gap had held, then I would have gone break even, and it would have been a different story. But it didn't hold. So moral of the story is follow your plan, stick to your risk management, and manage your trades exactly how you have done during your backtesting phase, during your learning phase. Because then in the live markets, the only difference is your emotions. And if you can master your emotions by following your plan, you're winning every single time. So overall, a loss for today. It is what it is.